Good afternoon, everyone, and thanks for joining us for this final panel of day 2 of the City UK's National Conference. My name is Anjalika Bardalai, and I'm the City UK's Chief Economist and Head of Research. And I'm very pleased to be here chairing this panel on regional productivity and regional imbalances. Regional imbalance is actually an area that the City UK has done a lot of work to examine, both from an economic and a policy perspective. And in fact, we actually just launched our latest economic research report last week, which looked at the regional contributions of financial and professional services exports in the UK, and finding that areas outside London actually account for around half of overall industry exports. But today we're going to talk about regional productivity more broadly. So just a couple of quick thoughts from me by way of scene setting, and also a reminder before I do so that we very much want this to be an interactive session. So to our audience, please do remember to put any questions that you might have for the panelists into the Q&A box in the Zoom function. So as we look at the impact of the pandemic across the UK, we're now starting to see a divergence in regional fortunes. For example, the unemployment rate has risen across the board, but looking at the situation now versus in the spring, we see that some regions like the Northeast and the Northwest, Wales, and indeed London have seen much more pronounced increases in unemployment than other regions. And this is obviously going to matter a lot for the economic recovery. If we look at productivity, labor productivity declined by 2% in the second quarter of this year. And we don't yet have data for this year at a regional level, but we know that before the pandemic, productivity showed significant variation across regions. So just to give you a sense of that, looking at financial services specifically, output per job in the industry ranged from about £76,000 per job in Northern Ireland and the East Midlands to about £100,000 in Scotland and the Southeast, and up to about £170,000 in London. Now, it might be too soon to tell for sure how wider productivity trends are going to evolve post-pandemic, but this afternoon we're going to hear from 3 experts who I know from our previous conversations bring 3 very different and very valuable perspectives to this issue. So with me today are Daniel Barlow, who's the Managing Partner of UK Regions at Deloitte, Yael Selfin, Chief Economist at KPMG, and Mike Eakins, Chief Investment Officer at Phoenix Group. So welcome to all of you, and thank you for being here this afternoon. I'd like to start by asking each of our speakers in turn to give us an overview of their thoughts on this topic. So Dan, perhaps we could start with you, please.
Anjalika, thanks. Thanks for the introduction. Thanks for inviting me. Good afternoon, everyone. So your exam question, Anjalika, of solving the productivity puzzle and addressing regional imbalances. When I've thought about that, my mind has gone to 3 places. The first place my mind goes to is this debate that you alluded to, Anjalika, in your introduction, about the trade-off or the supposed trade-off between employment and productivity. I think that is really interesting, that question of whether there is a trade-off, so you can't have an increase in productivity without impacting jobs. I'm looking forward to debating that with fellow panel members. What I do know is that certainly in the regions, and my role is to lead Deloitte in the regions, the top 2 or 3 things on every client's agenda at the moment is digital transformation. So there are some traditional regional businesses who are asking us to help them with transformation because those are their priorities. And obviously you would expect digital transformation to transfer into increased productivity. So that's the first thing I think of. Second thing I think of is on a much more local level, and I think of it as the secret sauce to increasing productivity, where I've seen great strides made in generating economic growth or increasing productivity. I think normally you see government, business and academia working together. So I think there is a kind of secret sauce on a local level. And then the third thing, Anjalika, I think, is that all organisations, government or corporate organisations, need someone responsible for regional productivity. So I guess for Deloitte, I'm the physical embodiment of that, and that I'm responsible for generating growth and increasing productivity in the regions. But those would be the three things. So I think digital transformation is a driver to productivity. I think business collaborating with government and academia is a bit of a secret sauce. And then all organizations having someone responsible for driving regional productivity. So those are the kind of three headlines for me, I think.
Okay, thank you very much. That's interesting. So I just want to pick up on one of those points. In the research that we've done, we found that there was a correlation in a lot of the UK regions between relatively high rates of employment and relatively low rates of productivity, again, in relative terms. Now, the very simplistic interpretation might be, oh, there's some kind of a trade-off. But from your remarks, you seem to be implying that, oh, it's not really that simplistic. It's not a zero-sum game. And we shouldn't necessarily look at it in terms of a trade-off. Is that right? What do you think the dynamic is there? And have you seen any kind of specific examples in the regions about how firms are approaching this?
Yeah, so Anjalika, that is what I think, and I'm particularly interested. I'm not an economist, so I'm particularly interested in chatting to Yael about this and getting an economist view. But on that subject about whether there is a trade-off, undoubtedly there will be industry sectors where there is that trade-off. Manufacturing, I guess, is famously one. But in technology, communications, I'm not sure there is that trade-off. I think in that sector, the historic data probably suggests that employment has gone up as well as productivity. But what I think is really interesting, last week I had discussions with a regional house builder and a regional construction business about increasing, well, it wasn't about increasing productivity, it was about digital transformation, which I think is one of the routes to increasing productivity. And it's clear from those conversations, construction businesses using sensing technologies to monitor the speed of traffic in roads that they construct, those sort of uses of technology. But I think those will increase productivity of those businesses while actually increasing employment. So my kind of, to an extent, a kind of layman's view, but anecdotal view is I see lots of traditional regional industry sectors where I see possibilities for employment and productivity to increase. But I'd be fascinated when we get into the subject matter to hear the economist view on that from you and Yael in particular.
That's great, thank you. Well, with that, Yael, shall we move to you? Could you give us your initial thoughts, please?
Sure. So I was going to talk about something slightly different, but I'm very happy to loop into the topics that Daniel has shared with us, which are very interesting, and obviously I have a lot of views of those, but maybe just give you a little bit of background just to start of where I see things. So I think it's important for us to look at the data, what we've got data so far, and that really highlights the casualties of the main, if you like, main casualties of COVID-19 in terms of the regional impact. And we've seen that concentrated, if you like, in those rural and coastal areas that depend heavily on tourism and hospitality, and then also on cities that are also relatively heavily dependent on hospitality and retail, as well as areas with strong presence of transport and manufacturing. And some of these areas were already relatively behind the UK's average performance in terms of economic growth and productivity prior to COVID. These include Blackpool and Great Yarmouth, for example, which rely on coastal tourism, but also the city centres of Glasgow and Newcastle that rely more, if you like, relatively on hospitality business. So to some degree, the pandemic has made it even more critical that the gap in UK regional performance is addressed, and ideally addressed by lifting the underperforming regions rather than seeing a fall in the performance of the best performing regions effectively. But unfortunately, there are no quick answers. Data that we have shows a clear dominance of London in terms of productivity as far back as 1871, when we first have data that we can compare across the regions. And our research found that if we want to make a difference, we need to create strategies that incorporate the full range of interventions needed to accelerate economic growth. Using a framework that we developed, but which is very straightforward, with emphasis on creating places where people can live better and not just produce more efficiently. I think that's really the key differentiation, as well as we also need to ensure that we maximize the use of resources within each region, especially in the context now that we're going to have less money. The government is going to have less money to spend on leveling up. It's clear. And we also have to have strong cooperation between different layers of government and local communities. And the debate on devolution, etc., is very much at the heart of this, but it's much more than devolution, really. So what we I mean, the way COVID-19 has changed how we work and interact with each other will be felt long after the pandemic is over, really. We will see new ways to capture what we call agglomeration effects as economists. And while city centers could remain a meeting point where people exchange ideas, people will be working remotely more, and other places with good hospitality offering may compete to host those interactions of ideas that we'll still see. And that means that we could see a more dispersed regional activity map across the UK in future, or further concentration driven by the fiscal attractiveness of a place or by personal preferences. And what it means, and I think this is really important because we're starting this new era now. We had our old problem of productivity, they haven't gone away. We've got some solutions, but the future is really up for grabs for many regions, although they need to also face the strong competition for investment and talents for more regions. So it is very exciting, but the big challenges are still there for us.
Okay, thank you. And I wonder, because you mentioned, these agglomeration effects, and I noticed that you also mentioned sort of the fact that your research has shown the relative disadvantage of rural areas compared to more urban areas. Could you say, or give a little bit more, just give a little bit more detail about, this idea in productivity terms of clusters, how economic and regional clusters work and operate and can help to boost productivity?
Yes, absolutely. So in the past, economists have been very keen on clusters and on agglomeration, and that's driven by a number of ideas. One is what we call economies of scale. It is much cheaper and much more efficient to do things at large scale quite often. You can take advantage of more experts' view, and you can produce things less costly. So having bigger areas where you can deliver, or also where you can produce, so you have access to more labor, etc. It makes it more efficient as such. The other element of it is what we call the dynamism of an area. So by meeting other people and having access to different people, even randomly, you exchange more ideas, and you're exposed to more new discoveries, and you're exposed to new ideas or better ways of doing things more than if you're somewhere more remotely. And then you have the additional potential attractiveness of areas where just things are happening. People want to be there. They tend to have better services sometimes. They may have better schools. They may have better hospitals. There's just access to a better way, if you like, to spend your money or live. So that's a big strength of what we call agglomeration or large city centers that is at least partially being questioned now with the new way of doing things post-COVID.
Very interesting. I'm sure we'll come back to that theme later in the discussion. But for now, Mike, could we get some initial thoughts from you, please?
Yeah, sure, Anjalika. I mean, look, as an investor of assets on behalf of our policyholders, so Phoenix Group, we look after about £320 billion of assets on behalf of 14 million policyholders. And those policyholders are spread right throughout the UK. They're not concentrated in London and the southeast. So from a managing policyholder money perspective, we actually take it at the core of our investment strategy is to make sure when we deploy those assets, we're deploying them on a regional basis, because frankly, that reflects the demographics of where our policyholders are. You know, if we're looking after the pension plan for a manufacturing unit or a manufacturing company in Newcastle, they don't want their money reallocated down to the south. They want it allocated on a regional basis. So we take the regional diversification of investments incredibly important, and it's at the core of our investment strategy, not just because that's how our policyholders are dispersed throughout the UK, but also as asset allocators, and investors over the very long term, because we're managing people's monies in their run up to retirement, which takes several decades, and in retirement, which again takes several decades. We are really interested in promoting long-term growth. So from a macroeconomic perspective, we really buy into the hypothesis that regional diversification does lead to that long-term growth, which in turn is good for asset prices, income generating assets, and then therefore for us delivering our obligations to our policyholders. I think getting into the specifics of where we invest and how we invest in order to accelerate that regional diversification, we really try and focus on 5 key areas in terms of where we deploy our capital. One is in transport. So we do invest in national transport. We invest in regional rolling stock because we believe that's a key way of bringing about that regional diversification. Going on to one of the points that Daniel spoke about in terms of digitalization, we really do believe in investing in programs that delivered a digital network out into the regions, and something like the shared rural network agreement is something that we're very, very focused on. The third area is the environment. There's no point in talking about regional productivity and regional diversification if you don't make some of the places where people live and work a safe place to be. So for example, investing in flood defenses, we think that's very important. The fourth area is housing. So you cannot get people out to the regions if there is not housing there. And we spend probably housing, and in particular social housing, is probably one of the areas where we've made the most material investments year to date. And look, the final area where we invest heavily alongside the public sector, so through the loans that we make to local authorities and direct to institutions, is education. We do believe very strongly that there needs to be a regional approach to the investment in education. And so another key area where we've invested, again, through local authorities throughout the UK, but also directly with institutions, is in education.
That's great. Thank you very much. I would love to just pick up on one of those points. You mentioned environment, and I have to pick up on this because we've learned just today, obviously, about the Prime Minister's new plan for the £12 billion green industrial revolution is from memory the way he's described it. How do you see that plan in a regional context? And I mean, how do you think that the regions can accelerate or take advantage of that push towards a more environmentally sustainable recovery?
Look, I think it's a combination of private sector investments and also how the private sector, in terms of that green energy initiative, really sort of sets themselves up. And, again, I'm talking here as an investor of capital over the very long term, over multiple decades. I mean, we look at many assets on a daily basis. And frankly, our hit rate in terms of, looking at and screening and doing due diligence on assets is in the single digits. So we will easily look at 100 assets and only invest in sort of 7 to 8% of that. But at the margin, one of the things that we're very keen on is ensuring that regional investment in green energy. And, that really does come down to day-to-day asset decisions where we're deploying tens of millions of pounds either into the debt, predominantly the debt part of the capital structure. So we're really providing long-term financing to green energy. And, one of the assets that we made very recently, and we upsized our investment in it, was because it had a regional aspect. Renewable energy is something that we invest in a significant amount. And in doing so, if we have the opportunity to invest and lend to companies who can do renewable energy on a diversified basis, that for us is a real win-win. And recently, as I mentioned, we upsized our investment in a company that provides solar panels to households in England. It does wind farms in Wales, wind farms in Northern Ireland, and hydropower in Scotland. That for us is a real flagship investment that we're really looking to make. And at the margin, we will allocate more capital and more assets to those renewable energy, those green investments who do give us a regional diversification.
Have you seen regional growth strategies kind of more responding and adapting to the pandemic, or is what you're seeing, growth strategies that were already in place prior to March, but the events of the last 8 months have now kind of pushed them forward or indeed changed them in some way? I mean, how have you seen this sort of evolution of these regional growth strategies over the last 8 months or so? And Dan, maybe I can come to you first for a view.
Sure. So I see a few things happening over the course of the last 8 months, two primarily actually. I see an increased propensity for, I mentioned this in my introduction, for government, business and academia to collaborate. So, and Yael said that that's really important on the local level, and all the examples I can think of is accelerated collaboration on a local level, be that in east of England around life science hubs, in Cambridge, in Birmingham around digital healthcare. So I completely subscribe to Yael's view that increases in productivity often happen, or it's important that they happen on a local basis. And I definitely see examples all around the regions where we at Deloitte and the business community, our competitors, government, academia are teaming together. And I think that will increase productivity. The second thing I see is, and this is a statement of the obvious, isn't it? But increased adoption of digital working and digital transformation. I think what's really interesting, kind of doing a bit of reading over the summer and also in the run up to this panel, actually when you look at productivity in the UK, as far as I can see, the largest UK businesses, the FTSE 100s and equivalents, stack up pretty well in terms of productivity to their global counterparts. But if the UK does have a productivity problem, I think that productivity issue becomes apparent in small, medium-sized businesses. But I think the good news is that my view is that there's been massive uptake in digital working and digital adoption for small and medium-sized businesses. So I guess the answer to your question, Anjalika, is yes, I do think that the pandemic in the last 8 months has probably accelerated collaboration, accelerated adoption of digital, and if they're done on a localized level in the regions, that should be a driver of increased productivity. So those are my thoughts.
Okay, Yael, Mike, anything you'd like to add on this one?
Maybe I would just add something that is probably quite positive in the sense that I absolutely share Daniel's emphasis on digital transformation and also on the focus on the smaller or medium-sized companies where we need it most. And just to say that these things take time. So for example, if we go back and think about how long it took for us to embed internet and smartphones and everything into the actual production processes, especially not just the larger firms, but also everybody else's, that takes about a decade. And we've got all these new technologies, and we've got big data, we've got the Internet of Things, etc., in the pipeline that we haven't incorporated it. And then yet what COVID did for us is, especially for that segment of the smaller mid-size, it almost forced them to accelerate the adoption of technology. So that would only be good in terms of productivity, and I think we will see it. But even without it, we just need to be a little bit patient. We had this productivity crisis, but productivity is really a little bit of a cyclical thing, and we were just at this point where it takes longer and takes a bit more time to just embed all these new technologies, and it will come. So we will have, on the back of that, stronger productivity in the UK and everywhere else, really.
Yeah, look, I think the thing I'd add to that, Anjalika, is as follows. Again, we need to stay invested. We have obligations to pay people's pensions over their lifetime. So for us just sitting on cash and waiting for financial crises or pandemics to pass, frankly, is just not an option. And I think as a consequence of this crisis, one of the reaction functions, and a reaction function, frankly, to be applauded by the UK Central Bank, the European Central Bank, and the Federal Reserve, was to instigate some pretty material monetary policy easing, either by cutting rates or by putting in place quantitative easing programs that frankly haven't been seen in the scale that have been put in place since the financial crisis, and indeed have gone beyond the financial crisis. Now, that has the impact of driving yields lower. So assets that we would have ordinarily invested in, namely government bonds and investment grade corporate bonds, the yields got to compress to levels where we just weren't able to invest solely in those assets and generate sufficient income to pay our policyholders their pensions. So then that pushes us more into private market assets. And historically, we were reasonably large investors in terms of financing commercial real estate, both the actual development and on an ongoing basis. Commercial real estate debt market dried up pretty quickly at the early stages of this crisis, as people began to really question the purposes of the long-term uses of buildings. But actually, interestingly, as that part of the fixed income and credit market closed, others opened, and namely financing warehouses and financing logistical chains. And again, that's something where we've deployed capital throughout this crisis, not just because we needed to stay invested, but actually, if you take a long-term view on the UK economy, how it comes out of this crisis, actually investing in logistical chains and warehouses on a regional basis will again really help accelerate that regional diversification. But going alongside that is it does need this, the support of the digitalization that both Yael and Dan have spoken about.
Okay, it's a great segue, because I did want to come on to the industry and pose a question specifically about financial services, if I may. So it's actually kind of a two-part question. One is, just by way of context, some of the research that the City UK has published shows that although the data are quite clear that in financial services, productivity growth has slowed in recent years relative to the pre-2008-9 financial crisis period, financial services productivity is still much higher than overall productivity in the UK economy as a whole. So the first part of the question is, are there any thoughts from the panel on what is it really that drives that productive capacity of the industry? And then the second part of the question actually picks up on something that you just were alluding to, Mike, when you were talking about investing in supply chains. And the second part of the question is, are there ways that the industry can help to improve productivity across the UK? So Mike, maybe I can come back to you in the first instance, because it kind of picks up on a point you were just making.
Yeah, sure, absolutely. Look, in terms of the productivity of UK financial services, yes, it's remained pretty robust and resilient throughout this pandemic, as have financial services on a global basis. And look, one key cause of that, or reason for that, is if you look at the last major crisis, namely the global financial crisis, financial services firms, be they banks, asset managers, insurance companies, were at the eye of that storm. And as a result, and as a reaction to that global financial crisis, regulators and policymakers on a global basis put in place a series of material regulatory and policy reforms that frankly, had the desired effect. It made financial institutions more resilient as they came into the next crisis. Now, it wasn't just the impact of the regulatory changes that came up out of the global financial crisis that has resulted in that resilience of financial services. Again, I cannot emphasize enough the support of central banks, both locally and on a global basis, and the speed at which they reacted to ease monetary policy conditions in order to ensure that financial markets continue to function through the early stages of this crisis were highly, highly material. And, you know, I'm sure at some later date in the years to come, people will look back and dissect how various institutions reacted to this crisis. But in our mind, there's no doubt about it. And we saw this in the early days of the financial crisis, you know, whether it was the Federal Reserve, the ECB, or the Bank of England, ensuring that liquidity was maintained in those early days of the financial crisis, of the current pandemic, were absolutely key. And you can see this in terms of how credit priced itself in, you know, at the end of March, beginning of April, investment grade credit, whether it was in dollars, euros, or sterling, widened significantly. And then as a result of the quantitative easing programs that were put in place, tightened significantly. So I think it was partially due to the, you know, the fact that financial institutions were more resilient coming into this crisis as a result of having gone through and been, frankly, in the eye of the storm of the previous financial crisis. But also, we cannot claim credit for all of that ourselves. I mean, I think the actions of central banks were particularly important in that regard.
Just building on Mike's point, clearly resilience and the regulatory environment is important. I'd say, Anjalika, as well, that when I think of UK financial services sector and the reason for its relatively better productivity, skills has got to play a large part in that, in the skills that we have in the UK around financial services and the quality of the vocational training, on the job training that people get in the city and in the wider UK is hugely important. I think there's some lessons to learn for us in the regions from that, in terms of investment in skills has to be one of the drivers to increase productivity. I think financial services sector in the UK has got that absolutely spot on. When I think of other sectors, if I think of cyber, for instance, as one of the sectors where the UK can be a world leader going forward, if cyber invests in skills and vocational training in the same way that FS does, then that has the potential to massively increase productivity in the regions. And, you know, my mind goes to, I was in a discussion a couple of months ago with Deloitte, the head of our cyber unit in the regions, and he's now talking to technical colleges and sending his people out to train in technical colleges so that people all over the regions in the UK get vocational training on cyber. So I think you know, skills is really important as well. And I think other industry sectors in the UK regions, there's a lot to learn from the financial services sector on skills.
And I may just add just a couple of things. One is I absolutely agree with Daniel here, and it's a human capital. If you look at the qualification, level of qualification in financial services compared to the UK average, it's about 10 percentage point above in terms of the number of people that hold the higher level of qualification. So it attracts more qualified people to do the job. And the other one is the digital technologies. So it is much more digitalized than other sectors, most other sectors, and hence more productive. And to some degree, we do have a bigger market in terms of a slightly better consolidation, not throughout the sector, but there's definitely pockets of the sector that are more consolidated and have bigger markets. We used to, at least until now, have a very large European markets to play in that help make us more productive. But then just looking at what we need post-COVID, one of the things that we think will happen is that you're going to have a lot of companies that are very, very tight on cash and have really been squeezed as part of this recession. And what they will need is a type of capital, if you like, that is not so much debt, but more equity finance and more risk-based equity finance, where here in the UK we have more of that than say in Europe, but that's really, I think, where we will need to work more with businesses and not just give them the equity capital that they need and share some of the risk, but also provide them it hand in hand with some of the, if you like, mentoring and support in terms of making that business function better and manage better together with the financial support. And that's, I think, where the financial services industry could play a huge role. And it's not just a traditional one, but also the alternative finance one.
Okay, that's great. So I have to say, at this point, I'm impressed, but not at all surprised by how wide-ranging this discussion has already been. Yael, you were just mentioning mentoring. All three of you have mentioned skills. All three of you have talked about digitalization. Mike, you mentioned education as one of the 5 core areas that you're focusing on. And so in that kind of very broad context, I wanted to ask, to what extent do you feel that really local level culture, policy, historical context, politics, all of that, to what extent do you feel that these really local level issues and factors shape the productive capacity of some of the regions?
I mean, I don't mind starting. I mean, I think it is very much a local issue to start with, but also part of it is the fact that you've got decision made not locally as well to some degree. So you've got this mismatch, if you like. So it's not all local, but I mean, just to give you an example, and when one of the things we've seen is there was a study on Germany, but it could have been the UK, where you could see that historically, where you had investment in cultural assets like, say, opera houses, that correlated very strongly with strong productivity later on. And that just really shows you how the tradition of wealth, investment in a place, and therefore attracting talent, it just serves you throughout centuries and throughout history, and really makes a place stronger.
Maybe if I could just pick up there, Anjalika. I mean, I think, one of the areas, as I mentioned, that we invest in on a regional basis in a significant way is social housing, directly to social housing associations, but and often in conjunction with local authorities. And I think even pre this pandemic, the openness of local authorities to engage directly with investors such as ourselves, and to understand the regulatory restrictions by which we can deploy our capital was incredibly impressive. And I would say that is true both of local authorities across the UK and also regional social housing associations. And I think that really does stand us in a very good place in terms of coming through this pandemic and really trying to invest in a way, in a regional basis, which accelerates the UK economy. So I think, and maybe people don't sort of give it enough plaudits. I think on a regional basis, certainly from the local authorities that we've lent to, and the regional social housing associations that we've lent to, there's a real openness there to engage with capital market participants such as ourselves and get private sector capital to come in and work alongside public sector capital. And I think on a going forward basis, particularly when you look at where national debt levels are in terms of GDP, like debt to GDP at 125%, bringing us really back to sort of, Second World War levels, I think that combination of private sector investment alongside public sector is going to be incredibly important on a going forward basis as the UK looks to take itself out of, the economic quagmire we found ourselves in this crisis, and will be, frankly, one of the key catalysts and accelerants to restore the UK to a place of positive economic growth.
I completely agree with that. It feels like that. One of the secrets to this is engage government, be that a local authority, a metropolitan mayor, or a devolved government, regardless of the framework. If government are engaged, then amazing things can happen when business and academia team as well. It kind of makes me think, recently we took part in something in Birmingham, in our digital healthcare hub, where we got government together, NHS trusts, digital healthcare businesses, and that will inevitably lead to increased productivity in those conversations in the healthcare sector. But having government involved in them is hugely important. To pick up on your other point, Anjalika, and Yael touched on it, the point about local, I think that the secret to increasing productivity has to be local. We can't just sit back and assume that HS2 will be built, we'll get great broadband in the regions, and that will be some kind of magical solution to this. I think everyone individually has to do something to contribute it, be that businesses or government or academics. I think on a local level, will only increase productivity if individuals are collaborating together and figuring out what needs to be done between them. I think that's really important.
That makes sense. So, I mean, we've just heard about collaboration, housing, and the example of opera houses in Germany. And in full disclosure, as a devoted fan of opera, I have to say I love that example, and I'm definitely going to have to go and look for that research in particular. So thanks for that. Now, we are running very close to time, but just in the last couple of minutes that we have remaining, I wanted to pose just one final question as a kind of summing up, and that was to ask each of our speakers, particularly because this discussion has been so wide-ranging and covered so much ground, in all of this, if there were just one message or perhaps one recommendation that you would want to emphasize as part of this discussion around, driving productivity in the regions, what would that be? What's your kind of one key takeaway?
Maybe I'll just go first, even though I had the pleasure of letting my co-panelists answer first in previous one. So I'll let them think about it, and then I'll give my thoughts. I mean, look, I think from a regional diversification perspective, and for improving the UK productivity and pushing productivity up to levels that are comparable to London and the Southeast in the regions, I think investment is key, as we've discussed, and I think it will be incumbent on long-term investors such as insurance companies. Not just insurance companies, also asset managers, and also pension funds. We shouldn't forget that, there's about 1.9 trillion pounds of assets sitting on UK private sector corporates in the form of their assets backing their defined benefit pension liabilities. I think it's incumbent on UK insurers, asset managers, and pension schemes to really engage with government, with their regulator, to really work out how they can invest in a regional basis. But I think the one key thing on that is that investment, particularly if it's done over the long term, has to be done in a sustainable way. And sustainability is not just a buzzword that asset managers and insurers want to throw out. This is something that's absolutely at the core of our investment approach, because our key stakeholders, namely our shareholders, our policyholders, our regulators, and our employees, really require us to invest in a highly sustainable way. And by the way, it's economically rational to do so, because if we lend to a company for 15 years, we really want to get our interest over that 15-year period, and we'd like our money back at the end. And that will only take place if those businesses have sustainable business models. So I think the one key thing to take away is that absolutely investing in the regions is key, but it's got to be done in a sustainable way. And by the way, I think there's a fantastic opportunity, especially on the back of the announcement from Number 10 today, to be able to invest in long-term sustainable infrastructure like projects in green energy, whether that's vehicle charging infrastructure or utilizing clean energy in terms of biomass production plants or promoting air quality. And I really do think the UK financial services has a really key role to play in that over the coming years and decades.
Shall I continue? So I'll be very, very quick. I think we need to really embrace the changes that we've seen through COVID and really start afresh, be it high street, or the future of retail, anything to do with climate change, but also transport infrastructure and everything. We need to really stop looking back, forget past, and really look forward to a new way of doing things and plan and invest accordingly.
And I'll just add to that. So Mike's sustainable investment, Yael's looking forward. I would add collaboration to that. I don't think there's a single organisation or person who can crack this. I think it will require business to team with government, to team with investors, to team with academics. So collaboration across all organisations. I'd add to those two very good points.
Okay, well, there we go. Sustainable investment, a fresh start, and collaboration. I think happily a fairly optimistic, forward-looking note on which to end, and some optimism to punctuate all of the gloom of mid-November and the ongoing pandemic. So to Mike, Daniel, and Yael, thank you very, very much indeed for your time and all of your insights this afternoon. We have now come to the end of this panel session. So just again, many thanks for being here and good afternoon to everyone.
Thank you.